How do local government budgets work? Welcome to the Civics Academy Local Government Series. These videos explain how local government functions. In order to be responsible citizens and shape the country we want, we need to know how government functions and how we can engage it. In this video, we explain how local government budgets are created and what mechanisms exist to ensure accountability in local government budgeting. What is a local government budget? Just as the National Minister of Finance delivers a national budget every year in his budget speech, every local municipality must prepare and publish its own annual budget. Section 215 of the Constitution requires that these budgets must adhere to national legislation. Municipal budgets are accordingly regulated by the Local Government Municipal Finance Management Act of 2003, the MFMA, along with the municipal budget and reporting regulations made under it. The budget must set out the estimated revenue and expenditure of the municipality. That is, the budget must show what the income and expenses of the municipality will be over the coming financial year, commencing on 1 July. Additionally, the budget must set out projected income and expenditure figures for the next 2 years. All municipal budgets thus involve a 3-year planning period. The budget is divided into 2 main parts: the operating budget and the capital budget. The operating budget reflects the cost of the day-to-day running of the municipality, while the capital budget reflects expenditure on capital projects such as infrastructure for water, sanitation, waste disposal sites, and roads. While the operating budget lapses at the end of the financial year, the capital budget may extend over a 3-year period. Who creates the municipality's budget? Every municipality has a budget and treasury office under the control of the municipality's Chief Financial Officer, the CFO. This office is primarily responsible for creating the annual budget, but with detailed input from all municipal departments. The CFO reports to the municipal manager, the MM, who, as the municipality's accounting officer, bears overall responsibility for the municipality's financial management under the MFMA. The mayor also plays a key role in creating the annual budget. Under the MFMA, the mayor is responsible for driving and coordinating the budgetary process and tabling the annual budget in the full municipal council. In this role, the mayor is supported by the Budget Steering Committee. This committee consists of the councillor responsible for finances, the MM, the CFO, and a number of senior managers. The budget must be formally approved by the municipal council at least 30 days before the start of the financial year. Individual councillors, other than the mayor and the councillor responsible for finance, have a very limited role to play in the creation of the budget. We explain this in more detail in our video, What is the role of municipal councillors in respect of public spending? What are the controls over the budget? Section 215 of the Constitution requires that municipal budgets and budgetary processes must promote transparency, accountability, and the effective financial management of the economy, debt, and the public sector. While municipalities control their own budgets, the council adopts it and the municipal officials implement it. There are numerous control mechanisms over the budget and budgetary process. National and provincial treasuries exercise oversight over municipal budgeting. The law requires that the budget must be realistic and credible. To ensure this, the budget must include comparisons with the previous year's budget and the actual income and expenditure of the previous year. The budget must also contain measurable performance indicators to allow for appropriate monitoring. Crucially, the budget must be aligned to the municipality's Integrated Development Plan, which is the municipality's principal strategic plan. The mayor and MM must both certify, when completing and submitting the budget, that these requirements are met. Generally, a municipality may not spend money unless the funds have been allocated to such expenditure in the budget. Expenditure outside of the approved budget is considered unauthorized expenditure. To ensure compliance with the budget, a Service Delivery and Budget Implementation Plan (SDBIP) must be published. Monthly budget statements must be prepared, and the Mayor must table quarterly budget implementation reports in Council, all of which must also be published on the municipality's website. How do you participate in the budget? Municipalities must ensure public participation in the budgetary process. This includes publishing the draft budget with supporting documentation when it is first tabled in Council, and inviting the community to make representations which the Council must consider when deciding on the budget. In a leading case, the High Court stated that citizens have a right to properly and intelligibly be informed by municipalities about a vital issue such as rates, so as to assist them in planning their finances and budgets. Summary. In this video, we explain how local government budgets are created and what mechanisms exist to ensure accountability in local government budgeting. A municipal budget is divided into an operational and capital budget. Must set out the realistic income and expenditure expected for the next financial year. Must be approved annually by a municipal council following public participation, and is subject to internal and external controls.
Let's proceed to the objectives of local government budgeting. So first will be the identify the 5 phases involved in local government budgeting process. Second will be the understand the purpose and significance of each phases in ensuring effective financial management. Third will be explain the responsibilities and roles of different stakeholders, including government officials, departments, citizens, and etc. in the budgeting process. Last will be outlines of principles, guidelines that govern the local government budgeting, including transparency, accountability, and efficiency. So let's proceed to the contents of the discussion.
So Section 305 of the LGC, or the Local Government Code, provides the following fundamental principles which govern the financial affairs, transactions, and operations of LGUs, or the local government units. So according to the Section 305 of Fundamental Principles, the financial affairs, transactions, and operations of local government units shall be governed by the following fundamental principles. So A. No money shall be paid out of the local treasury except in pursuance of an appropriations ordinance or law. Letter B. Local government funds and monies shall be spent solely for public purposes. Letter C. Local revenue is generated only from the sources expressly authorized by law or ordinance, and collection thereof shall at all times be acknowledged properly. Letter D. All monies officially received by the local government officer in any capacity or on any occasion shall be accounted for as local funds unless otherwise provided by law. Letter E. Trust funds in the local treasury shall not be paid out of concept in fulfillment of the purpose for which the trust was created for the funds received. Letter F. Every officer of the local government unit whose duties permit or require the possession or custody of local funds shall be properly funded, and such officer shall be accountable and responsible for said funds and for the safekeeping thereof in conformity with the provisions of law. Letter G. Local governments shall formulate sound financial plans and local budgets shall be based on functions, activities, and projects in terms of expected result. So letter H. Local budget plans and goals shall, as far as practicable, be harmonized with national development plans, goals, and strategies in order to optimize the utilization of resources and to avoid duplication in use of fiscal and physical resources. So letter I, local budgets shall operationalize approved local development plans. And letter J, local government units shall ensure that their respective budgets incorporate the requirements of their component units and provide for equitable allocations of resources among these component units. Letter K, national planning shall be based on local planning and ensure that the needs and aspirations of the people as articulated by the local government units in their respective local development plans are considered in the formulations of budget of national line agencies or offices. Letter L, fiscal responsibility shall be shared by all those exercising authority over the financial affairs, transactions, and operations of the local government units. And letter M, the local government units shall endeavor to have a balanced budget in each fiscal year of operations. So now that we identified the fundamental principles of local government budgeting, we will now proceed to the budget process in LGUs. So as you can see in the picture, the budget process in LGUs is divided into 5 phases. The budget preparation, budget authorization, budget review, budget execution, and the budget accountability. These phases are interrelated and sequential. So I will be discussing the first phase, which is the budget preparation. So the budget preparation is the first phase of the local budget process. It involves cost estimation per PPA, preparations of budget proposal, executive review of budget proposal, and preparations of the local expenditure program, which is the LEP, and the budget message. This phase starts with the issuance of the budget call and ends with the submission of the executive budget to the sanggunian on or before October 16 of each year. Legal basis of budget preparation according to the section 318 of the Local Government Code. Upon receipt of the Statement of Income and Expenditures from the Treasurer, the budget proposals of the head of departments and offices, and the estimates of income and budgetary ceilings from the Local Finance Committee and the Local Chief Executive shall prepare the executive budget for the ensuing fiscal year in accordance with the provision of this title. There are 8 key players in budget preparations: the Local Chief Executive, Local Financial Committee, Local Treasurer, Local Budget Officer, Local Planning and Development Coordinator, Local Accountant, Heads of Departments or Offices, and Head of Local Economic Enterprises or Public Utilities, and CSOs or the private sectors. We will discuss each players. First is the Local Chief Executive. So, the LCE shall prepare the executive budget for the ensuing fiscal year upon the receipt of the statement of income and expenditures from the treasurer. The budget proposals from the heads of various departments and offices and estimates of the income budgetary ceiling from the LFC. The LCE shall also submit the said executive budget to the sanggunian concerned not later than the 16th of October of the current fiscal year according to the section 318 of the LGC. Next would be the Local Finance Committee. So, LFC composed of LPDC, LBO, and Local Treasurer. Now, Local Treasurer, on or before the 15th day of July of each year, the Local Treasurer shall submit to the LCE or the Local Chief Executive a certified statement covering the income and expenditure of the preceding fiscal year. The actual income and expenditure of the first 2 quarters of the current year and the estimated income and expenditures for the last 2 quarters of the current year according to the section 315 of the LGC. So, Local Budget Officer or the LBO shall review and consolidate the budget proposals of different departments and offices of the LGU. The LBO shall also assist the LCE in the preparations of budget, and during budget hearings, the LBO shall prepare the draft budget message and the LEP in coordinations with other members of LFC prior to the submission of said document to LBO. Next is the Local Planning and Development Coordinator. So, the LPDC shall analyze the income and expenditure patterns and formulate the recommend fiscal plans and policies for consideration of the LPC of the LGU concerned. Next is the Local Accountant. So, the Local Accountant jointly with the Local Treasurer shall certify all statements of income and expenditures of the preceding fiscal year, the actual income and expenditure of the first 2 quarters of the current year, and estimated income and expenditure of the last 2 quarters of the current year. Next is the head of department or offices and head of local economic enterprises or public utilities. So, they should submit budget proposals for their respective departments or offices to the LCE through the LFC on or before the 15th day of July of each year. The said budget proposal shall be prepared in accordance with such policy and program guidelines as the LCE concerned may issue in conformity with the local development plan. The budgetary ceilings prescribed by the Local Finance Committee and general requirements prescribed in the Title 5 Book 2 of the LGC. However, the Sanggunian is considered a separate office for purposes of budget preparation. Thus, the Vice LCE shall prepare and submit to the LCE and budget proposals of the Office of Sanggunian. So now that we already identified the legal basis and the key players in budget preparation, we will now discuss the step in budget preparation phase. So step 1 is to issue the budget call. So what is budget call? The budget call is a directive from the LCE specifying the objectives, policy decisions, strategies, financial requirements, and prioritize PPAs by sector or office as reflected in the AIP. It provides clear guidelines in the preparations of individual budget proposals. This directive shall be disseminated not later than June 16 to allow more time for the department heads to submit reasonable proposals for the budget year. But why is it important? So, budget call emphasizes the policy objectives of the budget, the guidelines to be observed in the preparations of budget proposal. It focuses on the output aimed to be produced during the budget year. It firms up policy decisions on how to budget shall be financed. The prescribes the budget preparations, scheduled and forms. Budget call is consist of spending ceiling by major expenditures, resource allocation scheme or fiscal policy decisions, objectives, strategies, and priority PPAs, expected result, budget calendar and budget preparation forms, and lastly, other administrative guidelines. All these elements are explained in budget preparation workshops prior to the preparation of budget proposals for the budget year. Departments and offices of LGUs are guided by the policies, ceilings, and targets embodied in the budget call. Budget proposals are reviewed as to their consistency with the AIPs and budget call policies. Step 2 is to prepare and submit budget proposals. The budget proposals of various departments and offices shall be prepared using uniform templates to ensure the completeness and the comprehensiveness of budget information, as well as to facilitate the consolidation of all proposals in an accurate and timely manner. So here are the steps in preparing and submitting of budget proposals. A. Firm of MFOs, identify PIs, and set targets. So the MFOs identified for the programs under the AIP shall be firmed up to ensure their alignment with the departments or offices' organizational outcomes, mandate, visions, and missions. Thereafter, the corresponding PIs shall be identified. PIs are the means to measure how well the goods or services were delivered. This is where we measure the quantity, quality, and timeliness of services delivered to the client. Letter B is estimate cost for the budget year. So there are 3: the current operating expenditures, financial expenses, and capital outlays. So current operating expenditures refers to the appropriation for the purchase of goods and services for the conduct of normal local government operations within the fiscal year, including goods and services that will be used or consumed during the budget year. Financial expenses are expenses which are not used in the actual operations of the LGU. Capital outlays refers to the appropriations for the purchase of goods and services, the benefits of which extended beyond the fiscal year and which add to the asset of the LGUs concerned, including the investment in public utilities such as public markets and slaughterhouses. Letter C is prepare the PPMPs for the budget year. The PPMPs shall be prepared by all government departments, offices for all PPAs with proposed procurement of goods, civil work, and consulting services. This shall be done by firming up the PPMP prepared based on the approved AIPs, taking into considerations the available resources, particularly the budget ceilings of department or offices concerned. So letter D is to consolidate PPMPs into APP, and lastly is to review and consolidate the budget proposal. Step 3 is to conduct budget hearings and evaluate budget proposals. So under this is letter A, conduct technical budget hearing. So a technical budget hearing is conducted to review the rationale of the department or offices, review the PPAs by department or offices, validate output projections, and review cost estimates. This technical hearing may be conducted for at least 10 calendar days, August 15 to 25. Letter B is to evaluate budget proposals. Members of the LFC shall evaluate all the budget proposals using the following: the rationale of the PPA, MFOs, and PIs, criteria targets, and the cost criterion. Step 4 is to prepare the local expenditure program. So part 1 of the local expenditure program is the receipt program. So the first part of LEP is the receipt program. The receipt structure shall cover the immediate past year, the current year, and the budget year. Receipt resources are generated from the accomplished LBP forms. Form number 1, which reflects the following: local or internal sources, which includes tax revenues and non-tax revenues. External sources includes share from national tax, tax allotment or NTA, formerly known as the Internal Revenue Allotment, share from GOCCs or Philippine Amusement and Gaming Corporation or PAGCOR, and Philippine Charity Sweepstakes Office or PCSO. Number 3 is the other shares from local tax collections. Number 4, interlocal transfer. 5, and lastly is the extraordinary receipt, grants, donations, or aids. Letter C is the non-income receipt, includes capital investment receipt, receipt from loans and borrowings, and income of LEEs from its own operations. So part 2 of the preparation of local expenditure program is the expenditure program. The details of expenditure program shall include the proposed new appropriations by PBAs, which departments or offices shall present its performance information, which includes its mandate, vision, mission, organizational outcome, MFOs, and corresponding PIs, target, and proposed budget by expense class. Letter B is proposed new appropriations by object of expenditures. Letter C is a special purpose appropriation, and letter D is the special provision policies on the use of funds, specific purposes or expected outputs, and measures to reduce costs shall be provided after the presentation of the expenditure program, which department or offices or special purposes of appropriations as well as may be applicable. Step 5 is the prepare the budget message. So the budget message is a summary of proposed executive budget prepared by the local chief executive or the LCE, highlighting the following: previous year's fiscal performance, development goals and objective, policy trust, priority PPAs, estimate of income and sources thereof, major items in the expenditure program, and MFOs or PIs or targets. Contents of the budget message. The budget message provides justifications of the policy decisions and contained in the proposed executive budget. And lastly, the step 6 in the budget preparation phase is to submit the local expenditure program together with the following documents to the Sanggunian not later than 16th of October of the current fiscal year, according to the section 318 of the Local Government Code or LGC. Number 1 is the budget message, which we tackled earlier. Number 2 is the plantilla for personnel. Number 3 is the statement of indebtedness. Number 4 is the annual operation budget of local economic enterprises, if any, and AIP duly approved by the local Sanggunian. It is the responsibility and accountability of the LGU to ensure that the priority PPAs are embodied in the relevant plans and or document as required by the law and are incorporated in AIPs.
Hello everyone, let's proceed to budget authorization. What is budget authorization? It is the second phase in the local budget process, in which this phase starts from the time the Sanggunian receives the LAP submitted by the LCE and ends with the enactment of the AO or Appropriation Ordinance and approval thereof by the LC. Let's proceed to legal basis of budget authorization. On or before the end of current fiscal year, the Sanggunian concerned shall enact through an ordinance the annual budget of the local government unit for the ensuing fiscal year on the basis of estimate of income and expenditure submitted by the local chief executive, section 319 of LGC. Let's explain this provision. This provision from section 319 of Local Government Code mandates that local Legislative Council must pass the annual budget for the local government unit before the end of current fiscal year. This budget for the upcoming fiscal year is based on the financial estimates, both income and expenses provided by the local chief executive, such as the mayor or governor. In simpler terms, before the current fiscal year ends, the local governments must approve the next year's budget, which is prepared based on the income expected to be received and expenses anticipated by the local leader. This ensures that local government has a financial plan in a place for the upcoming year. What about the key players in the budget authorization? These key players collaborate to ensure that the budget is legally authorized, transparent, and aligned with the needs and welfare of the local community. First will be the LCE or Local Chief Executive, in which submits the Local Expenditure Program or LEP to the Sanggunian for authorization, and also approves or vetoes the Appropriation Ordinance AO after its enactment by the Sanggunian. Second will be the Sanggunian. It is the legislative body responsible for enacting the annual supplemental budget and also appropriates funds for programs, projects, services, and activities to promote local welfare. They also authorize the LCE or presiding officer to allocate funds within the budget through an ordinance. Third will be Committee on Appropriation Finance, in which they conduct a preliminary review and evaluation of the LEP. They also submit reports and recommendations to the Sanggunian for further deliberation. Fourth will be Secretary to the Sanggunian. They record and stamps the AO with the Sanggunian seal. They manage the official signing process and forwards the AO to the LCE for approval. They also ensures the posting of AO in the public places after its approval. Fifth will be Local Finance Committee or LFC. Assist the Sanggunian in analyzing and reviewing the budgets to ensure compliance with laws and regulations. Sixth will be Head of Departments and Offices. They may be called upon the Sanggunian to explain or justify their budget proposal. Seven will be Civil Society Organizations or CSO and private sector groups. They may participate in the budget authorization phase, contributing to the transparency and accountability if allowed by the Sanggunian. Let's proceed to the components of Step 1. First will be the Budget Document Review. The Sanggunian, with the help of Local Finance Committee, checks if all required documents are submitted with the correct signatures using the specific local budget authorization LBA forms. Let's proceed to the Budget Evaluation. The Sanggunian, with the assistance of Local Finance Committee, evaluates the local expenditure program to ensure it meets budgetary requirements and general limitations. Under Receives Program, there are tax, fees, and charges. The LEP must comply with local government revenue ordinances. Real property tax RPT. Estimated receipts should include all due and demandable RPT, including delinquent accounts. In Expenditure Program, there are budgetary requirements. Total appropriation should not exceed income estimates. Provision must be made for all statutory and contractual obligations. Debt servicing appropriations should not exceed 20% of LGU's regular income. Aid to component barangay should be at least 1,000 per barangay. At least 5% of regular revenue should be allocated to the Local Disaster Risk Reduction Management Fund, LDRMF, with specific portion for quick response and disaster management. National Tax Allotment, NTA. 20% of the NTA must be all allocated to development projects. Next is General Limitations. There is Personnel Services PS. Appropriation for PS should not exceed 45% of the total income for the first and third class LGUs or 55% for lower classes. Salary regulations. No salary should exceed the maximum allowed by law, and salary increases or position changes must follow the civil service rules. Discretionary funds should not exceed 20% of the actual receipts from basic RPT of the previous year and must be used for public purposes only. Compliance with provision of other applicable laws, rules, and regulations. Alignment with annual investment program. Our project in the annual operating budget must be listed in the approved annual investment program. Legal compliance. No items in the AO should be prohibited by law. All other expenditure must be authorized by existing laws, rules, and regulations. Appropriations for legal requirements. Ensure that specific appropriations required by law are fully provided, particularly those related to regular program, projects, and activities (PPAS). The proposed annual procurement plan (APP), which consolidates the procurement plans of all departments, should be used to evaluate the LEP. Annual operating budget of local economic enterprise (LE). Special account maintenance. The LGU must maintain a special account in the general fund for the LEE. Personnel services (PS). Salaries and other compensation for LEE officials and employees must be included in their respective LEE budgets, not in the LGU's general budget. Salary limitations. LEE officials and employees cannot receive salaries higher than the maximum allowed for their positions. Inclusion in AFP. PPAs of the LEE must be included in the AIP. Income management. Income from the LEE must first cover operational costs, then repay advances or loans, with any excess being added to the general fund of the LGU. Separate budget presentation. The AOP of each LEE should be presented separately in the LEP and included for the enactment by the Sanggunian. Deliberation. There is priority status. When the local chief executive certifies the local expenditure program as urgent, it becomes a priority for the Sanggunian, taking precedence over other measures. Public sessions. Sanggunian sessions are generally open to the public, unless a closed session is ordered by a majority vote for reasons of security, decency, and morality. No two sessions, regular or special, may be held on the same day. Presentation. Executive budget presentation. On the first day of deliberation, the LCE may present the budget priorities, program, and allocation across social, economic, and general services along with the sources of financing. Deliberation process. Committee on Appropriation Finance. This committee may conduct its own hearings and involve the local finance committee and the department heads in reviewing the budget. The committee then reports its findings to the Sanggunian. Authorization of the annual budget. After the budget deliberation, the Sanggunian authorizes the annual budget through an appropriation ordinance. An appropriation is an ordinance that authorizes the payment of goods and services from local government funds under specified conditions, detailing receipts, expenditures, and any special provisions. And there is voting requirements during this part. The ordinance requires a majority vote of all Sanggunian members. The contents of AO. Basic details, which includes an assigned number, title, enacting clause, and the proposed date of effectivity. Second will be supporting documents. Identifies documents that form part of authorized budgets such as the plantilla of personnel and annual operating budgets of local economic enterprises if applicable. General provisions. It may include rules on the use of savings and other financial guidelines. Summaries. Include summaries of new appropriation by expense class, object of expenditure by sector, and summary of statutory and contractual obligations. Rules governing the enactment of appropriation ordinance. Quorum requirement. A majority of all elected qualified Sanggunian members is required to constitute a quorum. Explanatory note. The proposed AO must be accompanied by a brief note justifying its approval. Submission process. The AO signed by its author is submitted to the Secretary to the Sanggunian, who reports it at the next meeting. Voting requirements. An AO requires the affirmative vote of a majority of all Sanggunian members to pass. The Vice Governor, Vice Mayor is a part of Sanggunian for quorum purposes, but it is excluded when determining the majority vote, except to break the tie. Simple majority. Majority of those present in the session with a quorum. Qualified majority of all elected and qualified members regardless of attendance. The AO must be passed by the majority of all Sanggunian members, as it authorizes the payment of money or creates liability. Legislative limitations. The Sanggunian cannot increase the budget amount proposed in the executive budget or add new items except for the statutory or contractual obligations and cannot exceed the total appropriations.
This aligns with the provision against increasing appropriations beyond what is proposed by the executive branch, similar to national government budgeting rules. Step 2. Approve the appropriation ordinance. After the Sanggunian enacts the appropriation ordinance, it is presented to the local chief executive. The local chief executive can either approve it by signing every page or veto it and return it to the Sanggunian with objections. If veto can be partial or total, must be communicated within 15 days for the province or 10 days for the city or municipality. Otherwise, the ordinance is automatically approved. Veto power of LCE. The LCE may veto any ordinance on grounds of being beyond authority or harmful to public welfare. The veto can apply to specific items within the ordinance without affecting non-objected items. The LCE must sign the AO even if certain items are vetoed, providing written reasons. The vetoed items will take effect unless overridden by the Sanggunian. Override of the veto. The Sanggunian can override the LCE veto with a 2/3 vote of its members, making the ordinance effective without the LCE's approval. Step 3. Post the appropriation ordinance. Posting requirements. When it comes to location, the Secretary to the Sanggunian must post the appropriation ordinance on the bulletin board at the entrance of the provincial capital, city hall, municipal hall, or barangay hall, and in at least 2 visible locations within the local government unit within 5 days of approval. When it comes to language, it must be posted in Filipino, English, or other language understood by the majority in the LGU. When it comes to documentation, the Secretary to the Sanggunian must record the dates of approval and posting in a designated book. Publication in highly urbanized and independent component cities. In highly urbanized cities and independent component cities, the ordinance must be published once in a local newspaper of general circulation. If no such newspaper is available, it should be published in any general circulation newspaper. 4. Effective date. Generally, an ordinance or resolution takes effect 10 days after it is posted, unless a different effective date is specified in the ordinance. In essence, this step ensures that ordinance is publicly posted, and disseminated appropriately to inform the public and provide transparency. Step 4. Forward copies of approved appropriation ordinance to the reviewing authority. For the component cities and municipalities, the Secretary to the Sanggunian Panglungsod for component cities or Secretary to the Sanggunian Bayan for municipalities must forward copies of the approved appropriation ordinance to the Sanggunian Panlalawigan. The timeline will be within 3 days after the AO's approval. And about the purpose, it is about review in accordance with Section 327 of Local Government Code, which ensures that the ordinance complies with legal and fiscal standards. For provinces, highly urbanized cities, independent component cities, and municipalities within the Metro Manila area. Action required. The Secretary to the Sangguniang Panlalawigan for provinces, Sangguniang Panglungsod for HUCs and ICCs, or Sangguniang Bayan for municipalities within MMA must forward copies of the approved AO to the Department of Budget and Management. This must be done within 3 days after AO's approval. About the purpose, it is about to review in accordance with the Section 327 of LGC and related provisions, Section 326 and Section 3 to 7 of LGC to ensure compliance with budgetary regulations. Let's proceed to the last part of budget authorization, which is changes in the annual budget. This may be done through supplemental budgets. No ordinance providing the supplemental budget shall be enacted except for the following. First will be when supported by funds actually available as certified by the local treasurer. Second will be covered by new revenue sources. And third, in times of public calamity by way of budgetary alignment, annual budget, according to Section 321 of Local Government Code LGC and Article 417 of its implementing rules and regulations, as amended Administrative Order No. 47, dated April 12, 1993,
adjustments to the annual budget are generally made through supplemental budgets. So, first will be about a supplemental budget ordinance must be backed by funds that are actually available as certified by the local treasurer, which ensures that the additional expenditure proposed in the supplemental budget can be covered by the existing financial resources. Second, the ordinance can be enacted if it is supported by the new revenue sources. This means if there are additional resources of income or revenue that were not previously accounted in the original budget, this can be justified the need for a supplemental budget. Last, in times of public calamity, a supplemental budget can be enacted to facilitate budgetary alignment. This means adjusting or allocating budgetary resources to respond to urgent needs arising from emergencies or disasters. With these conditions, it ensures that supplemental budgets are used responsibly and are based on actual financial capacity or pressing needs. That will be all for the budget authorization.
Budget review is the third phase in the local budget process. Its primary purpose is to determine whether the AO has complied with the budgetary requirements and general limitations set forth in the LGC as well as provisions of other applicable laws. It starts from the time the reviewing authority receives the AO for review and ends with the issuance of the review action. The legal basis refer to the procedures for budget review in the Philippines as outlined in the Local Government Code of 1991. First, Section 326 of the LGC, this section mandates that the Department of Budget and Management reviews the ordinances that authorize annual or supplemental appropriations for provinces, highly urbanized cities, independent component cities, and municipalities within the Metropolitan Manila area. This ensures that these ordinances comply with the legal standards and budgetary guidelines. Second, the Section 327 of the LGC, this section states that the Sangguniang Panlalawigan is responsible for reviewing ordinances authorizing annual or supplemental appropriations for component cities and municipalities within its jurisdiction. The review must follow the same manner and time frame prescribed for other ordinances to ensure consistency and compliance with local governance laws. There are four key players in budget review. First, Secretary to the Sanggunian. The Secretary to the Sanggunian plays a vital role in the budget review process. They are responsible for forwarding the ordinance that authorizes annual or supplemental appropriations to the Department of Budget and Management Regional Office or the Sangguniang Panlalawigan within 3 days after its approval. This action is guided by the Section 56 in relation to Sections 326 and 327 of the Local Government Code. Second is Department of Budget and Management Regional Office. The DBM Regional Office is tasked with reviewing the ordinances that authorize annual or supplemental appropriations for provinces, highly urbanized cities, and independent component cities within its jurisdiction, as well as municipalities in the Metropolitan Manila area. Third, the Sangguniang Panlalawigan or Provincial Board has the responsibility to review ordinances that authorize annual or supplemental appropriations for component cities and municipalities within the province. The Provincial Finance Committee is responsible for assisting the Sangguniang Panlalawigan in reviewing and evaluating the budgets of component cities and municipalities. This committee also recommends the appropriate actions based on their assessments, ensuring that budgetary compliance and effectiveness are maintained throughout the local government units. Lastly, civil society organizations and private sector groups. CSOs and private sector groups play a participatory role in the budget review process by promoting transparency and accountability. This organization can request a copy of the budget review findings from the LGU. By obtaining these findings, CSOs can engage in informed advocacy and contribute to public discussions about budgetary decisions. Reglementary period of review. The reglementary period for the review of appropriations ordinances for provinces, highly urbanized cities, independent component cities, and municipalities is set at 90 days. This timeline begins with the receipt of copies of the ordinances. The review process within these 90 days is essential for ensuring that the appropriations ordinances comply with legal regulations and align with local government objectives. It also allows for the evaluation of budgetary allocations to meet community needs effectively. The Budget Review Flowchart. The Budget Review Flowchart shows the sequence of activities from the time the Secretary to the Sangguniang submits the approved AO to the reviewing body until the same is returned together with the review action to the Sangguniang Panlalawigan, Sangguniang Panlungsod, or Sangguniang Bayan concerned through the local chief executive. The Budget Review Flowchart provides a visual representation of these activities, illustrating the sequence and relationships between each stage of the budget review process. Such a flowchart aids in understanding the roles and responsibilities of each participant in ensuring effective budget governance. Steps in the budget review phase. Step 1. Check the appropriation ordinance with the appended budget documents. The first step in the budget review phase involves verifying the appropriation ordinance against the appended budget documents. This ensures that the ordinance aligns with the detailed budgetary proposals and explanations provided by the local government unit. Step 2. Review the appropriation ordinance. The second step in the budget review phase is to conduct a thorough review of the appropriation ordinance. This involves scrutinizing the ordinance to ensure that it accurately reflects the intended budgetary allocations and adheres to applicable legal requirements and financial guidelines. Step 3. Prepare and issue the review action. The third step in the budget review phase involves preparing and issuing the review action based on the evaluation of the appropriation ordinance. This process entails compiling a formal document that summarizes the findings, decisions, and recommendations derived from the review of the AO and the appended budget documents. Review action. The review actions regarding the appropriation ordinance involve a formal assessment and declaration of the ordinance's compliance and effectiveness. The review authority must determine whether the AO is operative in its entirety, subject to conditions, partially inoperative, or fully inoperative. This categorization is critical as it directly influences how the local government can utilize its budget allocation. Effects of the review action. The review action plays a critical role in ensuring that the appropriation ordinance complies with legal and regulatory standards. By evaluating the appropriateness of budget allocations against established guidelines, the reviewing authority helps maintain the legal accountability in local governance. This compliance is essential to prevent financial mismanagement and uphold the integrity of the public funds. The effects of the review action in the budget review process determine how the appropriation ordinance and the association budget will proceed after the review. Depending on the findings of the reviewing authority, different outcomes can affect the implementation of the budget. Here's a breakdown of the possible effects. Operative in its entirety. If the review action deems the AO operative in its entirety, it means that the entire budget has been approved without any changes or conditions. The budget is fully compliant with legal and regulatory requirements, and the proposed expenditures and revenues are deemed appropriate and realistic. The effect is LGU can proceed with the full implementation of the budget as outlined in the AO. All the proposed programs, projects, and expenditures can be executed according to the plan. Inoperative in its entirety. If the AO is declared inoperative in its entirety, it means that the entire budget has been rejected due to significant issues such as non-compliance with legal requirements, unrealistic revenue projections, or misalignment with policy objectives. The effect is LGU must revise the entire budget and resubmit it for review. No part of the budget can be implemented until a revised AO is approved. This can delay the implementation of programs and projects, potentially impacting the delivery of public services. Inoperative in part. In this case, specific sections of the AO are declared inoperative, while the rest of the budget is approved. The inoperative parts may relate to specific programs, projects, or budget allocations that are deemed inappropriate, non-compliant, or unrealistic. The effect is LGU can proceed with the implementation of the approved parts of the budget, but it must revise and resubmit the inoperative sections for review. This involves reallocating funds, adjusting project scopes, or providing additional justifications. Nature of the review action. The review action serves as an official evaluation of the appropriation ordinance submitted by local government units. Its primary purpose is to determine the compliance of the AO with applicable legal standards and budgetary regulations, ensuring that the proposed allocations align with the public finance principles and local government objectives. Stamp of review. Review stamps serve as an official means of indicating that a document such as a shop drawing or submittal has been reviewed by a designated authority, typically a design professional. They communicate the disposition assigned to the document and the limitations of the review performed. The use of review stamps is not only a procedural formality but also carries important compliance and liability implications for design professionals. The language used on stamps can influence perceptions of responsibility and association risk linked to the reviewed document. Return of the reviewed appropriation ordinance to the LGU concerned. The Department of Budget and Management Regional Office or the Sangguniang Panlalawigan is required to return the reviewed appropriation ordinance to the concerned local government unit within 90 days from the receipt of the AO. This timeline is essential for maintaining the efficiency of the budgetary process and ensuring timely fund allocation from local government operations. Review actions and corrective measures. When an AO is declared inoperative in its entirety, it indicates that the entire budgetary framework outlined in the ordinance cannot be executed. This decision typically stems from significant deficiencies identified during the review process, such as inappropriate funding sources or misalignment with local government financing laws. Consequently, this declaration calls for planned financial actions linked to the AO until corrective measures are put in place. Following the declaration of an AO is inoperative, local government units must undertake corrective measures to resolve the identified deficiencies. These measures may involve revising the ordinance to fit within acceptable financial limits, ensuring proper documentation, and enhancing compliance with legal standards. Timely and effective corrective actions are crucial for enabling the LGU to resubmit a valid AO for approval and facilitate an interrupted service delivery to the community. When the appropriation ordinance is declared inoperative in part, it signifies that specific provisions or items within the ordinance do not conform to legal or regulatory standards. This partial inoperativeness could arise from items that are contrary to law or exceed general appropriation limits. As a result, only the non-compliant sections of the ordinance are rendered ineffective, while the rest may still be operational. To address the issues leading to partial inoperativeness, corrective measures must be implemented promptly. These measures may include amending the AO to align with established legal frameworks, redistributing budget allocations, or enhancing the justification for specific expenditures that were found lacking. Efficient implementation of these measures is crucial for restoring the full functionality of the ordinance. When the appropriation ordinance is declared operative in its entirety, the LGU shall comply with the conditions imposed before any disbursements are made, and the LCE shall notify the reviewing authority of such action. Enforcement of ordinances or resolutions after disapproval by reviewing authority. Should an official or employee attempt to enforce a disapproved ordinance or resolution, they may face suspension or dismissal from their position. This measure is designed to uphold the integrity of the local governance process and to ensure that only compliant regulations are enforced within the community.
So let's move on to the next phase, which is the budget execution phase. So the execution of the budget in accordance with existing laws, rules, and regulation is the fourth phase of the budget process in local government. After the usual recording of appropriations in proper registries, the execution of budget involves the release of allotments, certification of available appropriations, and cash, the recording of actual obligations and disbursements of funds for available PPAs, and delivery of goods and services to target clients in the most efficient, effective, economical, and ethical way. A critical aspect of this phase is the collection or the receipt of revenues to ensure that cash is available for payments of obligation and for timely implementation of programs and projects. Legal basis of budget execution. The fundamental principles governing all financial transactions in local governments are covered in Section 305 of LGC or the Local Government Code. The responsibility, however, for the execution of annual and supplemental budget shall be vested primarily in the LCE or the local chief executive concerned. The use of appropriated funds pursuant to Section 336 of the LGC shall be available exclusively for the specific purpose for which they have been appropriated. Another legal basis in the budget execution is the certification requirement under the Section 344 of the LGC, which provides that no money shall be disbursed unless the local budget officer certifies to the existence of appropriation that has been legally made for the purpose. The local accountant has obligated said appropriation, and the local treasurer certifies to the accountability of funds for the purpose. According to the Section 346 of LGC, disbursements of local funds shall be made in accordance with the ordinance of authorizing the annual or supplemental appropriations even without the prior approval of the sanggunian concerned. In case of re-enacted budget, Section 323 of the LGC states that in the implementation of such re-enacted ordinance, the local treasurer concerned shall exclude from the estimates of income for the preceding fiscal year those realized from non-recurring sources like national aids, proceeds from loans, sales of asset, prior year adjustments, and other analogous resources of income. No ordinance authorizing supplemental appropriations shall be passed in place of annual appropriations. Key players in budget execution. There are 8 key players in budget execution: the local chief executive, vice governor or the vice mayor, local budget officer, local treasurer, local accountant, local planning and development coordinator, department head, and CEOs and private sector group. These key players play different roles in budget execution. First is the local chief executive. The LCE shall be responsible for the execution of the AO, authorizing the annual budget and all subsequent supplemental budgets. Vice Governor or Vice Mayor. The Vice LCE shall sign all warrants drawn on the provincial, city, municipal treasury for all expenditures appropriated for the operations of the Sangguniang Panliliwigan or Panlungsod or Pambayan. Likewise, he or she can sign appointments for officials and employees of the local sanggunian if their salaries are derived from the appropriations specifically for the said local legislative body. Local budget officers. The LBO shall be responsible for 1. The preparation of release documents, the allotment release order for COE and CO. Number 2, the certification on the availability of appropriations for obligations request, the LBO shall coordinate with the local treasurer, local accountant, and the LPDC in release of appropriations and allotment pursuant to Section 475 of the LGC. Local treasurer. The local treasurer shall be responsible for the custody and proper management of funds in LGU concerned. He or she shall take custody and exercise proper management of the local government funds. It takes charge of the disbursement of all local government funds and such other funds, the custody of which may be entrusted to him or her by law or other competent authority, and the maintenance and updating of the tax information system of the LGU according to the section 470 of the LGC. The local treasurer also certifies as to the availability of funds prior to any disbursement and prepares the cash program for the LGU. Local accountant. The local accountant shall be responsible for ensuring validity, reliability, and propriety of all financial transactions of the LGU concerned. The local accountant also reviews supporting documents before the preparations of vouchers to determine completeness of requirements and keeps and maintains the books of accounts pursuant to the new government accounting system or the NGAS. The local accountant performs regular functions. It is in an inherent function of the accounting unit to ensure that disbursement are in compliance with law, rules, and regulations that are properly documented. Local planning and development coordinator shall be responsible for the formulations of an integrated economic, social, political, physical, and other development plans and policies for consideration of the LDC, monitoring and evaluation of the implementation of the different development PPAs in the LGU concerned in accordance with the approved development plan, analysis of income and expenditure patterns, and formulations and recommendations of fiscal plans and policies for consideration of the LFC. Now, department head shall be responsible for the preparations of financial and physical performance targets and obligations, requests for the authorized PPAs of the department or office concerned, implementations of PPAs to deliver goods and services to target clients, and monitoring and evaluations of actual performance of PPAs to ensure smooth and proper implementation. And the last is the CSOs and the private sector. Budgetary accounts in budget execution. The budgetary accounts to be maintained during the budget execution process includes the following: appropriation, an authorized made by ordinance directing the payment of goods and services from local government funds under specified conditions or purposes. Next is allotment, an authorization issued by the LCE to a department or office of the LGU, which authorizes it to incur obligations for a specific amount within its appropriations. Next is the obligation. The specific amount within the allotment which is committed to be paid by the LGU for any lawful expenditure made by an accountable officer for and in behalf of disbursement, the settlement of obligations and for account payable by cash, check, or other authorized modes of payment. So after discussing the legal basis, key players, and the budgetary accounts, we will now move on to the steps in budget execution. So step 1 is release of allotments on the basis of authorized and approved appropriation ordinance. So number 1, record the AO in the registries of appropriations allotment obligations or the RAAOs for each expense class. Number 2 is prepare the AROs on the basis of the authorized and approved AOs. The following AROs shall be released by the LBOs. Letter A is ARO for PS and associated PS costs. This shall be issued either comprehensively released for the whole year or quarterly as applicable. To the release appropriations for salaries and wages of regular permanent posts and contractual and non-permanent position. The itemized plantilla position of contractual and non-permanent position shall be used as basis for the release. This shall avoid the creations of lump sum amounts for PS except for authorized salary increase pending issuance of pertinent guidelines. Letter B, the allotment of MOOE shall also be released either comprehensively for the whole year or quarterly as applicable. The appropriations pertaining to the for late release portion of MOOE shall be for contingent purposes. Example is to respond to shortfalls in revenues and other foreseen events. Letter C, the allotment for FE, it shall also be released comprehensively for the whole year. Letter D is the allotment for CapEx. It shall be released on the basis of the work program and the ranking of PPAs as presented in the approved AIP and as authorized and prioritized in the AOs. The ARO gives the authority to spend within the confines of the PPAs as defined in the AO. The ARO is issued for each department or office to give the department head the comprehensive authority to incur obligations up to the amount of the release allotment. The imposition of the amount for later release is to provide safeguards for shortfalls in the collection of revenues during the budget year. It is noted that these are all policy-based actions that should be consistent with the general provisions or JPs of the AO. The following information shall be reflected in the ARO. Source of appropriation, whether it is authorized under the annual budget, supplemental budget, or the reenacted budget. And the PBA reference code, same as the AIP reference code. So step 2 is to prepare the detailed and summary of financial and physical performance targets and cash program. So number 1, prepare the detailed financial and physical performance target by PPA and performance indicator. So the department head shall prepare the detailed financial and physical performance targets by PPA. This document presents the quarterly breakdown of the financial allocation that is needed to accomplish a specific level of targets. It enables the department or offices to match available resources with the level of effort to deliver their goods, services, or outputs, and determine the magnitude and timing of additional release. Number 2 is to prepare the summary of financial and physical performance target. On the basis of the detailed financial and physical performance targets of different departments or offices, the LFC shall prepare the summary of financial and physical performance targets for the entire calendar year to serve as the basis in comparing actual level of accomplishment for the preceding year and knowing the available resources for the budget year. So number 3 is provide copies of ARO after its approval by the LCE. The release amount shall be stamped with the official seal of LGU and shall be recorded in the proper registry by the LBO and local accountant. Copies of the ARO as approved shall be distributed as follows. The original copy will be given to the LBO. The duplicate is given to the department head. Triplicate is given to the local accountant. Quadruplicate is for the records. Quintuplicate is for the local treasurer. So the release of ARO for supplemental budget as well as the realignment of savings from one expense class to another shall follow the same process outlined above. But for augmentation of deficiencies in allotment within the same expense class for offices within the executive or legislative department, the ARO shall be released document to effect the change. The former requires the submission of the supplemental budget for authorization by the sanggunian. The latter, on the other hand, can be done pursuant to a new ordinance or resolution to the sanggunian granting the LCE or the presiding officer the authority for the purpose. Number 3, prepare the cash programs. So here are the steps in preparing the cash program. First is determine a realistic cash inflow on a monthly basis. Use as basis the actual inflow of revenues for the past 3 years. Consider the months where revenue is high, like when payments of taxes become due, or months where revenue collection is low. A line graph may be used to show the high and low points of revenue collection to provide a historical or empirical basis of cash inflows. Next is cash flow model of the BLGF may be used as reference. Next is determine a realistic cash outflows on a monthly basis. Analyze in detail the timing of expected payments affecting regular operations. And payments for the acquisition of civil works under RA number 9184. Also include in the projected cash outflows the financial requirements for calamities and emergencies, accounts payable and outstanding obligations due for payments, as well as debt servicing. Next is detailed financial financial and physical performance targets shall be considered in determining the magnitude and timing of cash outflows. Next is compute the difference between the cash inflow and outflows within a given period. Month by month to be more specific, to determine the net cash flow. A projected cumulative net cash flow will indicate the capacity to generate surplus. Conversely, a cumulative negative cash flow will reveal the amount of additional cash requirements to sustain the operation. So number 4, revise and adjust the PPMP and corresponding APP. As soon as the AO authorizing the annual or supplementary budget is enacted and approved, and where there are significant changes in the amount authorized by the Sanggunian, the department heads of the LGU concerned shall adjust or revise their respective PPMPs, taking into consideration cash availability and time of procurement which were formulated during the budget preparation phase. This budget for the contracts shall be matched with the amount released through the AROs. If the amount is reduced, then there should be corresponding reduction in the quantity to be procured and vice versa. Consequently, the APP shall be adjusted in case where the authorized amount in the ARO is the same as the proposed amount submitted during the budget preparation. The PPMP or the APP need not be adjusted. So step 3, obligate and disburse funds. Pursuant to the modified accrual system under the NGAS, obligations shall be taken up on the registry accordingly. Expenditures and obligations incurred during the fiscal year shall be taken up in the accounts of that year. Obligations already incurred but not paid shall be settled in accordance with existing budgeting, accounting, and auditing rules and regulations. So step 4 is to adjust cash program for shortages and overages. In this step, the local treasurer adjusts the cash program where there are increases or decreases on actual cash collection. And on the basis of the adjusted cash program, the LFC adjusts the financial and physical targets. So the LFC shall determine amounts considered as over-collection of tax and effects upward adjustment in the cash program to match the increase in the cash receipt forecast. If this is not done, a significant amount of cash will be idle at the end of the year. Identify amounts considered as under collection of tax and revenues. This is a signal that the original cash receipt forecast is overstated. It becomes necessary to decrease the cash disbursement program for the remaining months to prevent the incurrence of the cash overdraft. So step 5 is implement corrective measures as proposed by the local finance committee and approved by the local chief executive. So number 1, the LFC shall compare the actual performance in both the financial and physical accomplishment, the targets for the quarter. So if the actual financial performance is greater than the estimated cost, it means that there was overspending beyond the available resources. This reflects inefficiency if the actual physical performance is below the target. This needs corrective action. If the actual financial performance is lower than the estimated cost, it means that estimated cost was overstated and performance is ineffective if the physical targets were not met. If the actual physical performance is greater than the target, it indicates that financial resources were utilized to the maximum, resulting in better than ordinary performance. This is assuming that targets were realistically set and not understated. In this case, no corrective action is needed. If the actual physical performance is lower than the target, it indicates that the target were overambitious or the people worked below par. Corrective actions is needed in this case. So number 2, the department heads shall explain substantial negative deviations and recommend remedial measures to address negative deviation. Number 3, the department heads shall prepare adjustment in the original targets to catch up with the plans for the fiscal year. Number 4, proposed corrective actions shall be submitted to the department head concerned to the LPDC for review and evaluation, for which it shall be discussed with the LFC members for final deliberation. The proposed corrective action is then recommended by the LFC to the LCE for approval. Upon approval, the department heads concerned shall implement corrective actions to get back on track with planned targets for the fiscal year.
The final phase of the budget process is the budget accountability. Its focus is on tracking and managing income and expenditures. It also ensures that all the financial transactions are monitored, recorded, and reported, providing transparency and allowing stakeholders to stay informed about the implementation of programs and projects. This phase also involves evaluating the financial and physical performance of the local government unit or the LGU to identify areas for improvements and ensuring that the budget remains transparent and effective. In this phase, there are 2 legal bases, which are number 1 is the section 340 of the LGC, which states that any local government officer responsible for handling local government funds must ensure their safekeeping according to the law. And even officers who aren't directly in charge of the fund can still be held accountable if they are involved in using or managing those funds. This provision ensures that all officials involved with public money are responsible for its proper management and use. And the second legal basis is the Section 305 of the LGC states that fiscal responsibility shall be shared by all those exercising authority over the financial affairs, transactions, and operation of the local government units. So here are the key players in budget accountability. First is the Local Chief Executive or the LCE. LCE is responsible for executing the annual and supplemental budgets, ensuring proper collection of taxes and use of local government revenues, and responsible for regularly examining the books, record, and other documents maintained by accountable officials to ensure that income collection and disbursement are properly recorded. Additionally, the LCE must submit an annual report to the Sanggunian by March 31 each year, detailing the financial and physical accomplishment of the local government unit. Next is the local treasurer, which its duties includes collecting all local taxes, fees, and charges, and regularly reporting on these efforts to the local chief executive or the LCE. Also, the treasurer manages the custody and disbursement of local government funds. It also advises the LCE and other officials on public finance matter. It also ensures transparency by posting reports on collecting and disbursement. And additionally, the treasurer is responsible for submitting periodic financial reports and performing other duties as required by law and ordinance. Next is the local accountant, which prepares and submits financial statement to the local chief executive and sanggunian, advising them on the financial condition and operation of the local government unit and maintaining an internal audit system. Also, the accountant is responsible for recording of financial transactions, maintaining ledgers, tracking asset, and submitting periodic financial reports. So, the local budget officer is responsible for certifying the availability of appropriations and allotments for expenditures, monitoring and evaluating the budget performance of programs and projects in coordination with other officials, and also proposing corrective actions for any budgetary deviations. Also, the local budget officer is responsible for preparing and submitting budget reports to the local chief executive and the Department of Budget and Management. Next is the local planning and development coordinator, or the LPDC. They are responsible in monitoring and evaluating the implementation of development programs and projects in line with the approved development plan. They are also responsible for analyzing income and expenditure patterns and recommending fiscal plans and policies to the Local Finance Committee, or the LFC. Additionally, the LPDC is responsible for preparing and submitting periodic reports to the local chief executive. The heads of departments and offices are responsible for monitoring and ensuring that their programs and activities meet targets and performance indicators. They also evaluate the performance of their department's outputs and submit periodic reports to the Local Finance Committee, or are the duties of the Local Finance Committee, which includes conducting semi-annual reviews of expenditures and project accomplishments against performance standard and posting these reports in publicly accessible areas. They also must provide copies of these reports to the local chief executive, or the LCE, and the sanggunian. So the following summarizes the roles of the budget accountability phase in the planning, programming, and budgeting cycle. First, it provides feedback for PPA implementation adjustments during execution of the budget. Next is it provides information to the general public on the performance of the LGU. And lastly, it provides necessary input information to the planning and programming of PPAs for inclusion in the budget preparation forms. So there are 3 steps in the budget accountability phase. Number 1 is the monitoring receipts and expenditures. So the table shown in your screen is the quarterly report of receipts, which is the local budget accountability form number 1. This form is certified by the local accountant based on the actual collection from the local treasurer's reports of daily collections. This form keeps track of all receipts, income, revenues, and borrowings for each month of the quarter and shows the variance between estimated receipts and actual receipts collected as of the end of the quarter. Next is the monitoring of expenditures includes the monitoring of appropriations, allotments, obligations, and disbursement. And the forms that are necessary to be prepared are the LBAC Form number 2 or the Quarterly Financial Report of the Operations and the LBAC Form number 4 or the Statement of Receipts and Expenditures or SRE. So the LBAC Form number 2 will give a picture of efficiency and effectiveness of the rate of utilization of appropriation by the various departments or offices of the LGU. And the LBAC Form number 4 is for monitoring the LGU's financial performance and present the income and expenditures. So each department or office head shall prepare the LBAC Form number 3 or the Quarterly Physical Report of Operations that shows the actual performance per activity versus the target output, and also the LBAC Form number 6 or the monitoring of physical and financial accomplishments. So the second step is the submission of all the required forms for accountability reports, and these forms includes the LBAC Form number 1, which is the quarterly report of receipts. Form number 2 is the quarterly financial reports of operations, and form number 3 is the quarterly physical reports of operations, and number 4 is the statement of receipts and expenditures, and number 5 is physical and financial performance evaluation form, and lastly the LBAC Form number 6 is the monitoring of physical and financial accomplishments. So the last step is the evaluation of performance of each departments or offices. So under Section 316 and the Section 320 of the Local Government Code or the LGC, the Local Finance Committee or the LFC, and the Local Chief Executive or the LCE are required to review the expenses and the achievements every 6 months. So this involves comparing actual results to the planned targets for each department's performance indicator and financial expenditures. So the review aims to understand how well the local government is performing and whether spending is aligned with these goals. Also, the LFC will report these findings to the LCE, the local council, and the other stakeholders to ensure transparency and guide future improvements.